So, you're trying to get a student loan, but you don't have a cosigner. It can feel like you're trying to climb a wall with no handholds, right? But what if I told you the secret wasn't finding someone to sign with you, but just having a smarter plan? Well, in this explainer, we are opening up the exact playbook to get a loan pre-qualification, and yeah, sometimes you can get it done in the very same day. And yeah, that feeling, it is so real. When those tuition deadlines are breathing down your neck, the pressure is just intense. We're here to turn down that heat. We're going to do it with clear, calm, orderly steps so you can actually move forward with confidence. Here's the big pivot. We are going to trade all that stress of finding a cosigner for a tool that is way, way more powerful. A disciplined, organized application. See, it's not about who you know, it's about how clearly you can present what you've got. Okay, so let's reframe this whole thing. This isn't some impossible hurdle. Think of it more like a solvable puzzle. And the solution is just understanding what lenders actually care about. And you know what? It's usually a lot simpler than you think. That's pretty much it. I mean, it really all boils down to these two signals. First, how have you been managing your money lately? And second, how risky does your specific school and degree program look from their side of the table? If you can send a strong signal in both of those areas, a cosigner can become totally irrelevant. All right, let's pull back the curtain and decode some of this lender speak. Understanding these three terms, soft pulls, hard pulls, and DTI, is absolutely crucial to navigating this whole process without hitting any roadblocks. And I promise we're going to make it simple. Let's use an analogy here. Think of a soft pull as just peeking through the doorway of a shop to check out the price tags. You're just looking, right? So it doesn't cost you anything and it doesn't impact your credit. A hard pull, on the other hand, is when you decide to walk inside and actually make the purchase. It's the official move, and that's why it gets recorded on your credit report. Okay, DTI. You're going to hear this a lot. It's basically your financial pulse. Lenders use this one number to see how much of your income is already spoken for by other debts you have. A lower DTI screams to them that you have the capacity to handle a new loan payment, and that makes you a much, much safer bet, especially without a cosigner. So when we say a clean file, what does that actually look like? Well, it's not about being perfect, and it's definitely not about being rich. It's about being clear. Lenders just want to see proof of your income, proof you're actually enrolled in school, maybe a small cash cushion for stability, and a clean, recent history of paying your bills on time. See, every single one of those items removes a question mark for the person who's reviewing your file. All right, you ready? Let's get to the action plan. And this isn't just a list of vague suggestions. This is a repeatable, three-step process designed to get you a clear answer fast. The whole strategy is this really simple loop. First, you're going to shop around for rate estimates using those soft pulls. Remember, no commitment, no credit hit. Second, you get all your paperwork perfectly organized into what we call a no-notes pack. And finally, and this part is critical, once you've picked the best offer, you authorize exactly one hard pull. That discipline is absolutely key. So what actually goes into this no-notes pack? It's simple stuff, really. A clear ID, recent proof of your income, official verification from your school, and bank statements where the name matches your ID perfectly. The whole goal is to give the loan reviewer zero reasons to pause or ask for more info. That's the secret. That's how you create speed. And look, this isn't just some theory we cooked up. It actually works. For example, one student followed this exact sequence, and by 3:58 p.m., they had a conditional offer in hand, before the business day was even over. A clean file and an orderly process, it just removes all the friction and gets you results. Okay, but I can hear you thinking, that's great, but my numbers aren't quite ready. Don't worry. The good news is there are two really powerful levers you can pull right now, like in the next week, to quickly improve your financial signal to those lenders. First up is that DTI ratio we just talked about. The magic number, your target, is to get it at or below 40%. You know, even making small extra payments on your credit cards can lower their required minimum payments, which in turn can nudge your DTI down. Every little bit helps here. And lever number two is your credit utilization. In simple terms, that's just how much of your available credit you're actually using. The big target here is to get this number below 30%. A really quick way to do that? Just make a small payment on whichever card is closest to that 30% line. These little tunes can have a surprisingly big impact. I love this quote because it just nails the whole point. Lenders are moved by data, not by stories. A small strategic payment that cleans up your numbers is so much more powerful than any essay you could write explaining your situation.
It's about showing them, not just telling them. Okay, so you did the work, you followed the plan, the pre-qualified offers are rolling in. Now what? How do you pick the right one? Well, here's a secret. The lowest interest rate isn't always the best deal. You have to look at the total cost of the loan. While you're in school, you're typically going to face a choice. You can go with full deferment, which means you pay nothing right now, but that interest just keeps piling up and up. The other option is making small, interest-only payments. This can keep your loan balance from growing. And trust me, it can save you a surprising amount of money in the long run.
I mean, listen to this. Just $22 a month. It might not seem like a lot, right? But for one student, it meant their graduation balance was nearly $400 lower than a friend who just deferred everything. Those small payments, they really, really add up.
Okay, here is the easiest win you will get, period. Almost every single lender offers an interest rate discount, usually 0.25%, just for setting up automatic payments. It is a simple click that saves you money every single month. Do not leave that on the table.
So when we say same-day timeline, are we serious? Yeah. Here's what that can actually look like broken down. In less than half an hour, you can have rate estimates from multiple lenders. In the next 30 minutes, you can upload your clean document pack. And just a few hours after that, you could be looking at a conditional offer. It's incredibly fast, but it all comes down to that preparation. All right, let's put it all together. Here's your final checklist for success. Your entire game plan boiled down. Start with soft pulls to shop around. Prepare one perfect document packet. Tune your key financial numbers, that DTI and utilization. If you can possibly afford it, make those interest-only payments. And finally, be disciplined. Commit to only one single hard pull. That right there is the path.
Look, the big takeaway here is that you are way more in control of this process than you probably think. You don't need a cosigner. You need a clear, clean signal. So looking back at everything we've just covered, what is the one 15-minute action you can take right now to start building that signal?